All right, welcome back. This is Jam Capital, and we're going to give an update on the Aussie versus the US dollar. First, past performance is no guarantee of future results. There is no guarantee of future performance. All investments involve risk, including risk of loss. And finally, this is purely education only. All right, so let's look at the first slide. Our first slide, we have there's a price right here, 0.69, 0.6970. Once it breaks, if and when it breaks that, we're going to have a downward projection down towards 0.6650. So first, let's figure out how we got there. If we look at our 5-wave progression here, I have a 1, a 2, sub 1, sub 2, sub 3, sub 4, sub 5. I have this as a ABC wave 4. Does it look like it? It's impossible, no, but it could be. With 4X, typically these charts are a little bit sloppier, and almost the rules of Elliott wave need to, I wouldn't say altered, but disregarded. Not disregarded, but there's a lot of leeway, so to speak. So this would be its 5 and the top of a minor C. So here we'd have obviously a WXY followed by its minor B. And then the final C wave typically is 5 waves. So if we look at this, the relationship between this wave 1 and this wave 5, both are very similar. If we set up a trend line analysis, which show that this is in line, so this is very, very well, quite possibly, can be a count. And as you see, what'll happen, same thing with the euro, we'll have a breaking of this trend line right here. Breaking of this trend line, and we'll see it shoot down to 0.6781 before we get some sort of relief. Now I want to show you another slide. This other slide is the opposite. This is the bullish version. And like I indicated before, 0.6970, 0.6970, that is our key invalidation level. That is our support. If it breaks this, we're going to see that 6781 support for sure, for show. So in this line, if you noticed in the previous slide, this wave 5 was stationed here. And this count, like I talked about before, it's kind of dicey on what this is right here. So in this count, this is a wave. This is its immediate B. It's a unorthodoxed flat. So unorthodox means if its B wave travels higher than the start of its A wave, it's considered unorthodox. So we have an unorthodox flat, which makes sense because this right here, the C wave, this right here looks like a 5-wave sequence, which can mean multiple things. First off, it can be a C wave. It can be a wave 1. So here, in this update, we're looking at both those cases. This is very, very important. Here, we have it as a end of a wave 4, an unorthodox flat. In the previous slide I showed you, we have this as a start of a wave 1. Start of a wave 1, which brings the opposite trend. So this right here controls everything, because this right here is a breaking of this upward trend But if it's a wave C like this in this slide, we have more upward movement and the trend continues. So this is very important. That's why 0.6970 becomes a very, very important support level, because it will show us the trend that we will see in the next few months. In this case, what I did is I took a trend line from bottom of 2, bottom of 4, and put it on top of 3 to give us a possible price and date projection within the wave 5. So here I just have a basic move up. In this next slide I'm going to show you also it can be a diagonal, but the most important lesson we have to look in this is this right here. 0.6970 is going to dictate where the 0.6970 is going to dictate whether this trend is exhausted or it has one more move up before exhaustion finally kicks in. And resistance we're going to see is 0.7367. That's typical for this next slide also. So if we look at this last slide, once again, 0.6970 is very, very important support level. If we don't break it, this is an error on my part. I should have taken this out right here, because what I'm trying to show you is a wave 1, a wave 2, a wave 3. This would be 4. I should have moved this over. That's my fault. This would be A, B, C, D, E. So in this case, with this choppy pattern, I can argue that this is part of a higher volatility move, which is indicative of an ending diagonal, which basically there's a lot of accumulation, a lot of consolidation. It's just a big mess. Low participant, low volume participation. A lot of people don't know what's going on, but yet price still creeps up. That is a key for exhaustion, and I'll be curious to see how this moves. But like we said, I've been reiterating, 0.6970 is a very, very key support level. If it breaks, this is going to be the result. If it doesn't break, these are our two options. If it breaks, we're going to see our first sign of relief will be 0.6781, followed by a true larger degree support at 0.6650. But if it does not break 6970, these are our two options. The key, if it breaks 6970, it's doing this. If it does not, there's a very high probability it's going to reach 0.7367. Whether the structure is linear or the structure is a choppy fucking mess, I don't know. But I do know 0.6970 speaks volumes as our support level. It's called the line in the sand. So I will leave you with this. In conclusion, 6970 is a key support level. If it's broken, it looks like to be an exhaustion. If not, we're going to see the market, the Aussie, creep up against the dollar. Thank you.